So you want to buy a home, but you're unsure if it's best to get an FHA or a conventional loan, and the more research you do, the more confused you become?
Hey y'all, it's Carmene coming back to you with this difference between an FHA and a conventional loan. What's the difference? Here's some top 3 major points. Let's start with credit score. FHA, 580. That is the lowest credit score, minimum credit score that you need to qualify for an FHA loan. They don't penalize you, meaning they don't charge you extra interest rate for having a lower credit score. Conventional, 620 is the lowest, the minimum credit score that they will even entertain. And with that, you will be paying a higher interest rate if you have a 620 credit score. Now, the higher your credit score, the less interest rate you'll pay, the better terms you'll get. So that's point number 1 between FHA and conventional, the differences. Point number 2, your down payment. Your down payment minimum is 3.5% for an FHA. Minimum for a conventional is 3%. Standard for both is 20%. That is where you actually want to be, but we all know everybody can't afford 20%, so they have made some concessions there. So the 3.5% in California on a $500,000 home, you'll be looking at a $17,500 down payment for a $500,000 home. On a conventional loan at 3%, at that same $500,000 home, you'll be looking at a $15,000 down payment. However, you have some down payment assistance flexibilities with gifts, grants, etc. We'll get into those programs later for FHA and for conventional. Third point for the difference between an FHA and a conventional loan would be your long-term goal. For example, FHA homes, you are always going to have mortgage insurance. As long as you have that loan, you're always going to have mortgage insurance. And let's say that mortgage insurance is costing you about $200 a month. That mortgage insurance is going to be included into your mortgage every month at $200 a month. For now, counter that with the conventional. The conventional, as soon as you hit 20% equity in your home, you can call and have that mortgage insurance removed from your mortgage payment. So that means you can save $200 a month every month once you hit 20% equity in your conventional home loan. So again, these are some quick 3 major points between the difference between an FHA and the difference between a conventional, and you choose which option is best for you, which works for you, which you can get the better terms, etc.
Remember, I'm Carmene of the Lorraine Realty Group, and I'm here to help.